Hello guys, welcome to my channel, and in today's video we'll be looking at Asian range trading strategy plus the institutional order flow. Most people teach this the wrong way. Okay, but before I continue, we should understand that there are three main sessions in the market. Okay, we have the Asian session, three main sessions. We have the Asian, we have the London, and we have the New York session. Okay, we have the New York session. These are the three sessions that we have, and the Asian session is the least volatile. Okay, the Asian section is the least volatile. In most currency pair, it ranges, especially currency pair that do not have the Japanese yen or the Aussie dollar in it. Okay, currencies that are traded in the Asian market by the banks. There in the Asian market, we have the Aussie dollar, we have the New Zealand dollar, and we have the JPY, Japanese yen. Okay, if you look at the pair in this Asian range, they do not usually consolidate. Instead, we have a trend going on there. There will be a trend, but compared to the other session, it's still it still have a low volatility. Now, when we are trading pairs without this Asian pair in, especially the EURUSD, we are going to have a slow market within the Asian session. Okay, because the Bank of England are not trading within this period. Okay, the ECB are not trading, even the Federal Reserve, they are not trading yet. So they are only interested, the EU and the pounds move mostly in the London session. It shows you that the banks are up and they are trading that pair because that is their dominant currency. Then in the New York session, you have the USD taking the lead. Okay, the Federal Reserve are out, the banks in the US are out, and they are trading the US dollar. So how do you trade this Asian trading range? Now, there are different ways to trade that, but I'm going to use an example of trade reversal. When you're having a trade reversal, okay, in this case, the institutional order flow is about to change. That is the only strategy I will show you here. There are other strategies to trade the Asian the Asian range, high and low. But first of all, you should know that the Asian session, the high and lows are liquidity. They are simply liquidity. So if you don't understand liquidity, I did a video on that. You can check up here in the card, or the link will be in the description. You understand the different type of liquidity. The Asian's high and Asian low are liquidity, and that means price will be magneted towards that region. Okay. The market, most people trade this with they simply say, okay, when the market, this is the Asian session, for example, that the market will take the low, then go for the high before moving. Okay, yes, this occur. Okay, this only occur during trade reversal, and that's what I will show you here. Sometimes you can have the Asian here, this is the Asian market, and only the top is being taken, trade back into POIF, they're moving out, leaving the Asian low untouched. Okay, most times in a trending market, you see things like this. You don't usually see both the top and down being taken. If the order flow is bullish, most times the Asian high will be the only rate of liquidity we have, especially when the banks are really protecting this Asian low here. There are different ways I can make you understand this. Maybe I will do a separate video on that. So you know that, okay, the lows in this case will not be taken. The moment you have a mindset that the high and the low will be taken, you are going to lose a lot. Okay, you are going to lose a lot because you are going to hold your trade here. Let's assume you are in here, price is going down. Instead of you to take your profit at this demand zone, you say you are having a mindset that the low will be taken, and by so doing, price reverses and knock you out. Okay, So in order to avoid this is only traded during what trade reversal. Okay, after a trend and there's what reversal, in that case both the Asian high and the Asian low will be taken in most cases. So this is how to trade it. If you are anticipating a reversal, okay, so what you need to do is simple. You are going to identify a point of interest above and below the Asian what high and low. Okay, above and below. Okay, let's assume this market is coming from a bearish trend. Okay, a bearish trend, and has printed a supply zone here. So what might happen is that price will take the low, take this high, trace back here before moving, or take the high first, then the low, okay, before what moving. The direction, what is going to take first, we do not know. We are simply following the price. But if it trades to this point of interest, we look to buy. Okay, when it trades to this point of interest, we look what to sell. Okay, before we continue the play. So this strategy is only done during what trade reversal. The rest I will reserve it for my mentorship students. Okay, so now let's look at the Euro USD here. In this case, okay, first of all, before we continue, there's an indicator that you need to install on your chart to show you the range. Like in this case, this is the Asian range for this particular day. Okay, this is a recent price action, and this was trade which I took. Okay, and why did we take this trade? Okay, we are taking this trade because we are approaching on the 4 hour. On the 4 hour, we are approaching what return to what origin. You see, yeah, price was heading back to our point of interest, a supply zone here. Okay, I could mark the other block, I could mark the IPA candle, whichever one. No, as price approaches it here, I only make the Asian indicator visible on the 1 hour below. Okay, from 2 hour below I feel. So this is the point of interest we're looking at. Price has been what bullish since, and I'm anticipating what a reversal from here. Okay, from this point of origin. This was where the move started, and this move took out lows, and there was a break of structure to the downside. So I'm expecting this high to be what to hold, okay, for price to reverse. So now when you go to the 1 hour, that Asian what's it called, the Asian indicator will show. By the way, this is the indicator for those of you that do not know. You simply go to your indicator here, type in FXN Asian session range. Okay, when you type that, this will come out. So Billy_FX is what you should be choosing, which is what 240. I used to use this one before, but I noticed on Monday it misbehaved. The box will just be shifted to another zone that is not of interest to you. So I have to look for another one, which is, and I'm quite happy with this, Billy_FX. Okay, FX and Asian session range by Billy_FX. So once you type that, put that in your chart, and you are ready to go. Now, when you wake up in the morning, like in the London session, you can see here, prior to now, price has already gone in during the Asian session, created a low and a high. So when I saw this, even though it was within my point of interest, I refused to sell, because I was waiting for price to take this. And immediately price took that high, I entered the trade from here. The exact entry I will not be sharing here. Okay, but once this raid of liquidity is taken, you can just go to your lower time frame and then monitor a shift in the structure. Okay, when this was taken, you can trade this back down. In this case, you know that the price will come back to the low, to sweep the low. Okay, if it doesn't come now, it will eventually come, because you are expecting a lower price is. Now take note, you are expecting a lower price. in this currency pair as at this point in time. So once this high is taken, okay, you can switch to your what lower time frame. Let's look at the 5 minutes. Switch to your lower time frame, okay, and there you have it, your lower time frame here. You can see this is rate of liquidity. As price breaks structure, you wait for price to come back in, and you can take your trade off this particular one. IPA candle. Okay, that could be your entry. Then your stop loss could be either here or above here. Then where is your target? Your target will be what? The Asian low. In case you are looking to target the low, you can simply go to the 1 minute time frame. Once price takes that liquidity up there and broke structure, okay, structure was broken here. The moment it trades back into this IPA candle here, you can decide to take your trade. Okay, this trade you take it, your stop loss above, then your target will be either the 50% level or the Asian low. Okay, but as a swing trader, you can also just position yourself. Once price move above this, you buy, yeah, you sell. I don't know why I keep saying buy. You sell, yeah, okay. When you sell, your stop loss above, you wait for the rate. This is not what we're looking at. This is not what we're looking at, sorry. Okay, this is you wait for what? You can simply put your limit order above this. That's another way of entering. Then your stop loss above. So when price triggers you in, next thing it goes down. You can target this for a what? 1 to 4 hour. You can target this here. Okay. And for a continuation play, now you can see that this is a shift in market structure or a change of character. You have here, okay. So when price trades back into your point of interest here, in this case, once price trades back to this hidden base here, okay, or once it takes this third candle high, you can take your trade stop loss above, and you can target this low here or these different levels. This hidden liquidity are simply going to be shown to you by that indicator. I think previous day low, previous day, previous week low, or thereabout. Okay, those are the target. You can set the target this first, then target this second. You can see that in this case, because we are anticipating a reversal, price will sweep both high and lows. Okay, now you can easily take this trade, okay, and then target lower because we are expecting a reversal. But if you look at others, you can see here this is the Asian range, but because the institutional order flow is still bullish, when the rate is completed, it trades back down to this order block. You can take your trade because you don't expect price to come and sweep this liquidity. Most people teach this wrong. They say, oh, when you enter here, target here. By so doing, you are going to lose your trade. Okay, you should know exactly what you're looking for. Structure first, okay, institutional order flow first before you look at this. This is just one way of improving your trades. Okay, but it's not simply that the high and the low will be taken every time. Now if you look at this, this is the reversal point here too. Price took this low, took this high, then came back. Okay, came back into this beautiful what? OB. Then you can see price rallying up. This strategy only works at what? Trend was reversal. When you are anticipating reversal, that's when you target the high and the low at the same time. Okay, otherwise you don't do that. Okay, so if you have any question concerning the Asian range, feel free to put it in the comment section, and I will do my best to answer that. If you are new to this channel, kindly subscribe, hit the notification bell, like, and then feel free to comment. So far I think I reply to every comment, but I know as the channel grows I might not be able to reply to all the comments. But if you want me to reply to your comments, kindly put it in the comment section, and I will be glad to do that. On that note, watch this next video. This next video is about trading smart money, because everything we are doing here, we are trading like the banks. Okay, we are all retail traders, but the logic to trading is different from the retail perspective, which we were taught back then. So smart money concept, to understand it, watch this video, and I'll see you in that video. Bye.